Happy Friday, everyone. Thanks for joining us today on this edition of Business Daily. I'm Lee Ji-yoon. We have plenty on our plate today, so let's get started with a look at the day's highlights. Apple's iPhone 7s hit the shelves here in Korea as Samsung Electronics struggles to win back consumer trust following its failure with the Galaxy Note 7. Questions arise over China's growth figures released this week, showing the economy grew at 6.7% in the third quarter, in line with the government's full-year target. These stories and more coming right up. But first, global credit ratings agency Fitch Ratings has kept its AA- rating for Korea for the fourth consecutive year. The finance ministry announced on Thursday that Fitch had maintained the credit rating based on Korea's strong macroeconomic performance and robust external finances, which are counterweighed by geopolitical risks stemming from North Korea and the country's massive household debt. Fitch's AA- rating still stands lower than Moody's rating of AA2, which is equivalent to Standard & Poor's AA for Korea. As far as economic growth goes, Fitch estimated that the country's economy will expand 2.8% this year and 2.9% next year, adjusted from its estimates of 2.7% and 3% respectively back in February. Korea Electric Power Corporation, or KEPCO, has won a $48 billion deal to operate a nuclear power plant in the United Arab Emirates for the next 60 years. After sealing the agreement with the Emirates Nuclear Energy Corporation in Abu Dhabi on Thursday, KEPCO President Cho Hwan-ik said the deal will give exclusive rights to the electricity provider to manage and operate 4 nuclear reactors, which are currently under construction. This is expected to create up to 1,000 new jobs overseas and pave the way to secure more energy projects from other Middle East countries like Saudi Arabia, Egypt, and Iran. Samsung Electronics Vice Chairman Lee Jae-yong looks ready to break out of his relatively low-key stance and take a seat as a registered board of directors member, pending shareholders' approval on the 27th. The National Pension Fund, which holds an 8.69% stake in Samsung, is said to have expressed their approval, along with U.S. activist hedge fund Elliott Management, which holds a 0.62%. This comes as the tech giant has been grappling with the unprecedented termination of its Galaxy Note 7 that wiped off billions of dollars from its market cap. The appointment would mean the 48-year-old Samsung heir apparent would become the first member of the owner family legally responsible for management of the conglomerate after his father Lee Gun-hee officially stepped down as Samsung Group chair in 2008. The wait is over for consumers here in Korea, as Apple's latest iPhone models are now on sales at retailers across the country. Our Kim Min-ji takes us to the scene.
It's the newest player on the market. Apple's iPhone 7 and 7 Plus hit the shelves in Korea on this Friday. The models, which boast features such as wireless earphones and a much improved camera, are available at retailers nationwide.
Some Apple fans queued up for days to be the first in Korea to get their hands on the latest iPhone.
I waited in line for 4 days. I think Apple is the best when it comes to functions, and I really like the new black color. It feels so real.
The new series comes in 5 colors and carries a price tag of roughly $770 for the iPhone 7 and $900 for the 7 Plus. Reflecting the popularity of the new models, pre-orders were at more than double that of the iPhone 6 line.
Because Apple releases a new major phone every 2 years, there's usually a lot of interest in the next series. On top of that, the termination of the Note 7 and new features, like water resistance, are grabbing the attention of consumers.
Apple stands to potentially be one of the biggest beneficiaries of the Samsung Galaxy Note 7 debacle, as both companies compete in the high-end smartphone market. Market watchers say without a viable substitute for the Note 7, more consumers may turn to Apple's latest release.
People are moving to the Plus series, so the 7S Plus, the 7 Plus, or the 6S Plus, and we're going to see HTC and Huawei and Lenovo pick up business.
With that, Apple could get a bump in its global smartphone market share. Samsung held number 1 in the second quarter at over 22%, followed by Apple at about 12%.
With future sales of the Note 7 wiped out, Apple is expected to see additional sales of about 10 million units. That also means it's the only new smartphone in the high-end market.
Down the line, while Samsung is expected to stay on top in terms of overall market share thanks to its budget lineup, analysts say Apple will likely take the lead in the high-end sector until Samsung's next release proves to be safe and comes with eye-catching features. Kim Min-ji, Business Daily.
And moving on to markets, to give us a wrap-up of this week's stock market action, we have our Business Daily's markets contributor Choi Jin-seok joining us on the phone today. Hello, Jin-seok.
Thanks for having me.
All right, so as we close the week, how was the last day of trading?
On Friday, the Kospi fell by 0.37% to close at 2033, while the Kosdaq followed with a 0.6% downtick. The Kospi market showed weak performance throughout the session after the European Central Bank, or the ECB, maintained its key policies at its Thursday meeting. Meanwhile, ECB President Mario Draghi dismissed the possibility of a reduction in asset purchases, but he also signaled that policy support will not last forever, and this comment spurred worries throughout global stock markets. The strengthening U.S. dollar also spooked sentiment among foreign investors who unloaded shares during today's session. However, both foreigners and institutional investors changed their position to buy in late hours. By individual stocks, share prices of Samsung Electronics fell by as much as 2% during the session as its rival Apple launched its new iPhone 7 flagship series.
Now, overall, the Korean equity market stayed pretty tame throughout this week. So tell us about the overall market performance this week.
On a weekly basis, the Kospi rose by about 0.5%, while the Kosdaq plummeted by almost 2%. The Kospi had enjoyed a 0.9% rally until Thursday, but today's drop slashed weekly gains. Again, this week, the Kospi market followed sentiment among foreign investors. Through Thursday, foreigners bought 820 billion Korean won, or $720 million worth of stock, but the index fell as foreigners once shifted their position to sell during today's session.
So what upcoming market events should investors be looking forward to? I mean, the foreign exchange market is still weighing heavily on people's minds.
That's right. If you look at the trends, foreign investors are still putting their money in emerging markets, especially focusing on buying shares from Korea and Taiwan. But a continuous strong dollar trend may prevent foreigners from investing further in emerging markets, because if the value of the US dollar rises, profits foreigners can obtain from emerging markets start decreasing. That's why investors will want to keep a close eye on the FX market next week as well. Individual stocks are expected to move following earnings reports. According to KTB Securities, Hyundai and Kia Motor Group, component company Mando, construction firm Daerim Industrial, as well as SK Innovation and OCI will unveil their quarterly results in the coming week. This has been Choi Jin-seok for Business Daily.
Korea's STX Offshore and Shipbuilding has filed for bankruptcy protection in the United States as the Arirang shipyard looks to offload its business to a foreign buyer. According to the Wall Street Journal on Thursday, the administrator managing STX Offshore's Korean bankruptcy case has placed the company into Chapter 15. Now, Chapter 15 is a section of the U.S. Code that deals with international insolvency. And if recognized by the judge, Korea's fourth largest shipbuilder will be entitled to receive the protection of U.S. bankruptcy law, including stopping lawsuits and preventing creditors from seizing assets. STX Offshore, with assets worth more than $2 billion and liabilities of $5.5 billion as of last year, filed for receivership in May. It has been hit hard by Chinese competitors amid a global downturn in the industry. It's Friday, and that means it's time to look through some important global business stories from this week. And for that, we're now joined by Eunice Kim in the studio. Hello, Eunice.
Hi, June.
All right, so we got third quarter GDP figures from China this week, and that were good, but then it did raise some eyebrows. Why is that?
Yeah, well, why don't I let you judge for yourself, June? Take a look. China's first quarter GDP was 6.7%. Now, if you look at the second quarter, it was the same thing, 6.7%. So, Q3, 6.7%. What are the odds? Many have asked this week. CNBC did say this was the first time a country reported three of the same back-to-back GDP growth since Reuters began collecting data in 1992. Now, having said that, 6.7% was bang in line with what forecasters were watching for, which would put Beijing on track to reach that 2016 growth target, you'll remember, between 6.5 and 7%. In fact, just about at the middle of those two figures.
Okay, so China has been working to shift its economy away from state dependence to one that's driven more by private consumption. So how are they doing on that front?
Well, if you look at official data, they're not doing bad at all. Data released Wednesday by China's National Bureau of Statistics shows consumption has accounted for about 70% of GDP growth so far this year. Now, consumer goods sales expanded by 10.3% in the first half of the year, and that does accelerate slightly to 10.4% when you add on Q3. Total sales came up to $3.54 trillion. The Statistics Office goes on to report online sales surged in the first 9 months, and it's also seeing the rate of consumption growth in rural areas, in fact, exceed that of cities, albeit by a small margin.
Interesting indeed. I mean, let's dig into this a little bit more. Are we seeing any trends in the way Chinese consumers are spending their discretionary income?
Sure. Less on instant noodles, more on imported beer, less on instant coffee, and more on brewed coffee. Do you spot the trend here? Taste buds are becoming more sophisticated as consumers are given more options. Statistics show demand for imported beer has gone from 0 10 years ago to 84 million liters in the month of August alone. And coffee. One analysis out this week showed demand for fresh coffee is pushing back the popularity of instant coffee in China to the delight of Starbucks, which also pledged this week to fire up its China expansion plans by opening one new store pretty much every day for the next 5 years.
But of course, there are still concerns about the underlying health of the Chinese economy, which not least of which is the government's debt load.
Right, and many outside economists do still view that Beijing is spurring economic growth through heavy government spending, especially in infrastructure. The IMF issued another warning on Chinese debt this week, noting the country's credit growth has been expanding, quote, very fast, and that the government needs to address the debt overhang, otherwise prepare for a potential financial crisis. China's debt load is more than double, some would say triple its GDP, much of that coming from provincial governments. But corporate China is sitting on a lot of debt as well, about $18 trillion worth. And discerning onlookers say China's banking system has reached an inflection point. Then there's the worry about the housing bubble. We're hearing from Reuters today that September marked a peak in rising property prices. And by its analysis of 70 major cities, Reuters is reporting prices shot up by 11% on average year over year. That record rise was pronounced in Tier 1 cities like Shanghai, which, get this, saw a hike of nearly 33%. The Chinese government has rolled out new rules and restrictions in recent weeks, but analysts are saying, this appetite to invest has very few options within Chinese borders.
So we definitely heard some good and bad news from China this week. Now let's turn next to some updates on the Brexit front.
Sure.
Theresa May is attending her first EU summit as UK's Prime Minister. And of course, the topic of Brexit is expected to draw a lot of attention and interest.
Absolutely. And this is a 2-day EU summit that Theresa May will be attending, or she is attending, during which they'll also discuss sanctioning Russia for its role in Syria, as well as a trade agreement with Canada. Now, heading into the meetings, Prime Minister May says she comes with a clear message.
The UK is leaving the EU, but we will continue to play a full role until we leave, and we'll be a strong and dependable partner after we've left. It's in the interests of both the UK and the EU that we continue to work closely together, including at this summit.
And what her EU counterparts will want to have from May is some clarity. Her tone at a recent Conservative Party conference had been interpreted as the UK pursuing a possible hard Brexit, with an emphasis on taking back immigration control. Now, French President François Hollande said if it was a hard Brexit she wants, hard negotiations she would get. Well, German Chancellor Angela Merkel was gentler, saying the EU would wait for the UK's formal notification. And finally, Saudi Arabia's debut into the global bond market this week was received with surprisingly strong demand from yield-hungry investors. Its sovereign offering of 5, 10, and 30-year bonds exceeded expectations to issue a stellar $17.5 billion denominated offer, which is the largest from any emerging economy in history.
Well, those are some definitely impressive numbers there. All right, thank you so much for coming in today.
You bet.
And that wraps it up for today and this week. Thanks so much for watching, and we'll be back next week with more business news that matters to you. Until then, goodbye.